Good morning. It's Harvey Jackson. Just going to go through the conflict in the Middle East and a little bit of the wheat breakout as well. So palm oil rises over 4% in the which is the biggest jump over a year on stronger oil and soybean. You can see there's been a pretty good increase over the last day or so, close to 5%. And you can see how this actually is represented just in the last day and how that's actually traded. So you went from just over 4,000 ringgit to 4,200 as I drew out this chart. So looking at what that looks like in a longer term, you can see that you broke out to higher values that we just made in the short term and gets us back to the 61.8 retracement value, which was kind of limited by the previous high as well. So upside now, if we can maintain this kind of channel upwards, would probably be in this 42.72 kind of ringgit value. Oil demand is still got some concerns in the world with the conflict, but there is numerous analysts out there talking that there's still going to be oil supply available from other countries that are not within that contract or conflict. But what that conflict does is get some more frigates over there, a little bit more action, and whenever there is big warships sitting in some of those oceans over there or those seas in the area, there isn't a whole lot of transportation of anything going by those things because there's always a chance that they could get hit. So oil is in this downward channel, and there is the potential that we're getting the top end of this channel. So if we do break out at some point, it could be a fairly bullish, significant move. We'll have to see if that actually happens. But wheat eases after touching over 3-month high, but when you look at the chart, it actually is breaking out. So I'm looking at Chicago wheat on this first few slides, and as we get into the slides later, you can see that there is a breakout of the previous highs that got made. So if you're looking at the short-term retracement, it's been reached above the $6 value, and wheat at 608, 614 with next levels for it to continue, or are potential areas that we should consider to catch up sales and stuff. So canola oil, 100-day moving average is the at 621, and we are just about there. If you're going to put a star on there, if we're just about there and just about at that same previous high that was made back in August. And we need to remain above that trend line, of course, too. So if we're looking at the forward curve, you've got pretty good carry in this market, and you're looking all the way out to new crop. And if we get an upside target reached on the previous slide, we're probably looking at somewhere in this kind of range. And what this looks like on that chart, and the reason I've got a line chart or area chart is because there isn't a whole lot of liquidity, but we're looking in this range probably to make another sale, or our first sale. And I'll just maybe quote what I've been suggesting to clients for years now. Rule of thumb: if it makes sense to sell old crop, so crop that's getting harvested or just recently in the bin, look to see if the next year's crop makes sense as well. And you can see that there was very low liquidity to be able to get to that 675, but just knowing how these retracement values have significance in there, we should be looking at this upper level. Rapeseed, you can see it's in this upper channel, approaching your 61.8 would be the next level for the area to make another sale. But we've got some differential happening here. We're at the bottom end of our upward slope of the rapeseed price in Canadian dollars, so we're right around $102, right close to that $100 mark. I ideally want the canola to gain on the rapeseed value. And I guess if that were to happen, the way I would say is ideal is the canola rises and rapeseed doesn't, or it keeps rising slower than the canola rises, and that would actually get us into a better price area but still be competitive for the export market in the world. So here's your November canola, and as I showed before, we need that upside target, but the next sales should be in that 634 to 640 range up in here to get achieved if we can break through this other short-term trend. So here's your soybean oil. Next hurdle is that 61.8 retracement. As we're starting to run through those, 50% retracement value isn't a real retracement, so I'm just leaving the actual retracement values in here, which is right around that 44.6 cents a pound. Soybeans, Not the same kind of positivity as the veg oils, but still positive. But we're having a little bit of a downward staying in these channels, and you can see that's happened a couple times before in this channel. So the goal is to stay out of or out of the bottom of this channel and trade towards that 100-day moving average. Wheat. So here's maybe the bad news, and you can see the good news after this. But the spring wheat has not broke through this retracement value of the 100-day moving average at 648, and the short-term trend. So we need it to break out, like some of the other commodities. So if we're leaning into the same kind of a scenario with canola using the Harvey's rule of thumb, we should be looking at the $7 area probably to consider making our first sale for new crop. So hard red winter wheat went through the previous high, approaching the 100-day moving average and the 38.2 retracement. Same thing with the milling wheat. It beat it 2 days, so we've got 2 days of trading above there, and we're approaching that 38.2 retracement. So Europe is, maybe gaining and showing us the potential where some of the other milling wheats can go. Corn broke out of the channel and above the 38.2 retracement, and I would say the upside target is probably in this range up here for the next sale for corn on futures alone. And that's all I have for you today. We'll chat with you later.